Evening, ladies and gentlemen. Good evening. All right, let's get started. Okay, it's 8 o'clock Eastern. Actually, 8:02 Eastern time. Here we go. All right, good evening, everybody. Good evening, ladies and gentlemen, and or good morning or good afternoon, wherever you may be when you're watching this video here. So good to have you all here. I see a lot of people still joining us here. A lot of people coming online here this evening. So good to have you all aboard. All aboard. All right, let's just get things queued up here. So, and while we are waiting, it is January the 14th. Let's get started. I think did I recorded it? Yes, I hit the record button. There we go. All right. I think last week I forgot to hit the record button. So, all right. I see the questions box are already coming in, folks. There's a questions box icon on your Zoom dashboard. So please use that for any questions or comments you might have. And I already thank you very much for some of these people that are already chimed in because I guess some of the folks, excuse me, out there know that I am I was scheduled for surgery, gallbladder operation here on for next Friday. Happy birthday, right? My birthday is actually next Monday, so next Friday is supposed to go on. So I got a call from my surgeon a couple days ago. Funniest thing, he says, "Oh, we have to reschedule your surgery because he, the surgeon, was rushed to the hospital for an emergency surgery on him." He said, "Oh, well, okay. So we're looking at March now, but so I'm thinking this may be an omen. Maybe I don't have to do this. I don't know if to see, but anyway, gonna keep my eyes. Gonna keep my options open. I've got people on both sides be telling me, do it, don't do it, don't do it, do it, do it, don't do it. Anyway, we'll see what happens. So anyway, thank you for all that. And thanks for everybody who's chiming in here from wherever you are, wherever you may be here tonight. Said here, good evening. Jackson said from Fort Lauderdale, Florida. Hey, listen, gang. I hope that we're and Phil L. I hope your recovery is fast as well. Let me know. Keep me posted there. And wherever you may be with the storms coming around, right? You want to make sure that you're safe and warm and hunkered down. So um, last several weeks we were going pretty long with this webinar, about an hour and 20 minutes, hour and a half. I don't think we're going to go that long here tonight, so we're going to kind of move it along. So yeah, wherever you are, I was going to tell you real quick about just some of the things to think about technology wise, as far as when if you are prone to power outage areas, which we are. So a couple of things to keep in mind. It's a good idea to have a UPS, uninterrupted power supply, and if you've had one now for a few years, good to check it once in a while. Right, check that the batteries are still good, that you have ample power to power down should your power go out. Um, I think just having a Generac generator or something is good, but I think there's like a 5 or 6 or maybe 10-second delay between the time your power goes out and that generator power kicks in. So you could actually lose, your internet and whatnot too there. So also in that vein, make sure if you are plugged into a UPS, uninterrupted power supply, that your modem and router are also plugged in. Doesn't do any good. Good idea too. Actually, we'll be talking about this in one of my newsletters coming up here. Good to have an app on your cell phone. So if you have to defer to some backup, you've got that. Also, make sure you know how to use it, and make sure as you're getting to a store, make sure that your cell phones are charged. Right, you want to make sure they're all charged up in case your power goes down and you need the cell technology there to keep you afloat. Good to have some spare batteries on deck as well, because like if you're like me, you've got a wireless mouse and a wireless keyboard. Sooner or later, they're going to run out of power, and you would hate to lose a trade or lose closing a position because of a $2 battery or something. Anyway, a lot of good stuff coming on that, but we're not going to waste your time on that. All right, questions box. Is this available later if we are unable to participate live? Yes, it is, Greg. This will be posted on the website. By the way, all relevant webinars will be posted on the website. And if you are like a Trading Room member, subscriber, you will have access to prior Trading Room webinars. So you have to go in and log in and all that too. So Troy saying maybe time for a new surgeon. Oh, maybe. I don't know, have to see what happens here. Ted saying he's had all years ago, no problem. I hope you're right. I get both sides, and I don't know. I like to have all my original parts if I can. Ted says you'll be fine. All right. Hi from Columbus, Ohio, Pittsburgh. Good to have you here. Michael M. Thank you so much, Michael. He's got a Generac. Full house backup. That's what we have here too. 3 years now, loves it, uses it. Okay. Right. Okay. Yes. Howard's asking here. Have you ever been on a, speaking of batteries, have you ever been on a cruise and used their high-speed internet to have timely trades executed? Yeah, good question here. So if you're going on a cruise, better be careful there. Sometimes their internet is spotty. I noticed that on cruises, internet could be very spotty because I think what happens is everybody in the morning they get on to check their email. So when you have 5,000 people all logging on, you're lucky to get any any bandwidth at all. And of course, that's when we need it, right? At 9:30 in the morning. So that's kind of a tough one. So, and that's what I've been on Royal Caribbean. Thanks for that, Howard. Yes, we have traded on Royal Caribbean, and like I say, I don't know, it's been several years now that I've been on that and used their internet. It has been a little tough because of that reason. So I try not to rely on their internet 100% if I'm in trade. Usually I have traded in the past, but I stopped doing that because it's just not reliable. That you're gonna get your your space on that internet if everybody's on there at the same time. So all right, okay. Hello from Southern Utah. Good to have you all here. 60 degrees today. Okay, and well, we are cold here in Western New York under stormy skies, snow and wind, lots of wind. Okay, all right, we're gonna get into some of these questions here. Hello from Texas. Okay, thanks for that, Michael. Hugh must tell you, Aaron, and it must tell you and Aaron, I'm a new user of Pick of the Day and Signal Trades. Highly recommend your services. Thank you for these trades. How about a satellite phone be somewhat foolproof? I've not used a satellite phone. That's another thing with cell phones, folks. If you do lose your internet, you can hotspot that. Be familiar with how that works. That's actually a pretty way of doing it too. So anyway, and Nestor is telling me this is interesting here. Nestor just chimed in. He said 90% of cruise travelers only rely on the free Wi-Fi, but if you pay for it, you're going to be okay. That's good to know. That's good to know. So. All right, let's move along here. Where are we here? Okay, weekend review. Okay, so please use the questions box. All right, get the legal stuff out of the way here. Legal stuff. All right, give you a second to read this. Where did it go? Where did it go? There it is. By attending this webinar, you fully understand and accept the financial risks involved in trading securities. I keep losing it here. All right, the risk of loss can be substantial, folks. You should carefully consider whether such trading is suitable for you in light of your personal investment objectives and financial resources. I'll let you read the rest of it here, and I'll be back in a second here. Okay, you alone are responsible for all your own trading, and past performance does not guarantee future results. These are not empty words, they are real. All right, so meet your hosts. My name is Hugh. How do you do? Okay. We've been doing this for a long time. So these Sunday night sessions are kind of relaxed, casual, informal. And just so you don't get your high hopes up, we're not going to teach you everything we know in this hour together. Nothing like that at all. We're just a casual conversation, talking about things in general and trading and whatnot. Try to answer a lot of your questions and whatnot. So most of my training that I teach what I trade, and I trade what I teach. Is that right? Yeah. Um, and um, and most of the things that I learned that I learned from the School of Hard Knocks. That's the best teacher. You can go to all these different courses and classes and different things, and they'll teach you a lot of things, a lot of theory. They all sound great. I don't know if you've been to any other presentations. Tell me in the questions box if you've been to any other presentations or whatever, any other courses or whatever you may have taken. Goodness knows I was to a lot of them back in the early days when I was learning this stuff because I had to. I didn't know anything else. I didn't know anything else. Man, when I look back at how naive and dumb I was, I just think to myself, I can't believe I survived this long. I just can't believe it. But I did. And and I became pretty good at it. See, what happened was my financial advisor lost half my account after investing in it for years, coming from corporate America. And I got a little annoyed when I found that out, and I yanked my accounts. And obviously, I have to learn how to do this myself. I was pretty comfortable with numbers. That was my job as an internal auditor, and so I was pretty comfortable with numbers and risk. Well, I had to figure this out. But I also knew that with the power of the internet, we all have information at our fingertips just as much as anybody else. So why can I not learn this? Who am I? It's just like, if you want to book a trip now, you don't have to go through a travel agent for what? Um, you just you book your flights, you book your hotel, your cruise, wherever you're going, right? You just book them, right? So same thing too with investing and managing your own money. But the School of Hard Knocks is a good teacher. Now, I used to make a lot of money and I used to lose a lot of money. But with every loser, especially the losers, I would always look back and see what lesson, is there a lesson here? Is there something I could learn from this? And I think it's more important to learn from your losers because the winners you like to celebrate, of course, but losers are important too. You should never let a loser go into a loss with no benefit. You should always learn something. So I always try and take away something from losers too. So anyway, long story short, eventually I got pretty good at things. I started just trading equities and I looked at futures. I traded Forex for a little bit and options, kept coming back to options. And eventually I honed in on just SPY options, just SPY options. So before we go any further, I want to mention that I think there are a lot of people, we have a lot of people online here tonight. And I think there are a lot of new people who don't know anything about options. And if you are one of them, please let me know in the questions box. You'll find a little questions box icon on your Zoom dashboard. The reason I'm telling you that is because, um, and thanks for that, Troy. He says between December the 26th and January the 12th, I've successfully traded the pick of the day. Thanks. So tell me in the questions box if you're brand new to options, never heard of these things. What are these things? What's so special about options? Let me know, and I'm going to give you a primer after this first part of the session. We're going to kind of break it up in two parts. All right, the first part, we're going to take a look at the events that happened over the week and what's coming up in the week to come, and we'll answer some questions and have a little bit of a fireside chat. And then after that, stick around. And anybody who's brand new to options, never heard of these things, don't have a clue why SPY, why us, why now. Stick around and we'll go over if there's demand for it, obviously. Then we'll go over the options primer. And if there's not a lot of people, then maybe we'll skip it. We'll see. But I think if there's anybody at all interested, I'll stick around. Not a problem. I'm here to please you. I'm here to please you. All right. So anyway, I like to have breakout trades. I enjoy breakout trades. It could be breakout off of 1 minute, just a short-term trade. Could be off the 5 minute, whatever. But and I like chart patterns. I like support resistance and all these wonderful things. Now, my associate here, Aaron, who may be joining us later on tonight, he actually came from a little bit different background, very similar to me in that he's also from the School of Hard Knocks, I guess you'd call it. He was actually a technical analyst. Started this back in his teens. As a matter of fact, back in high school, he'd be spending his time down in the library when all the other kids are out there goofing around wherever they were, in the, I don't know, football field or whatever, and running around, whatever they're doing. You'll find Aaron in the library reviewing and reading Wall Street journals and looking at charts, stock charts. He was pretty good that way. He felt that look at this, markets go up and they go down. How profound, isn't that? And he became actually a technical analyst for a $150 million commodity fund. And he identified excellent longer-term high probability trades. And he does that with us too. And every morning in the trading room, Aaron and I get together and we discuss the events of the day, the news items, and the important events that are going to move markets. And we look at the technical indicators as well, not just the fundamentals, but the technicals as well. And we determine does it have a propensity to go to the upside or to the downside? And that's the direction that we're probably going to go. And then we wait for the setups. Then we enter our positions, excuse me, and then we look to make some trades. My throat is a little dry here, so you'll find me, drinking some water here. But anyway, that's And that's what Aaron does. Now, super nice guy. Funny as anything. Actually, we have a lot of fun. We like to blame Aaron for everything anyway. Something goes wrong, it's Aaron's fault. But anyway, he may be joining us later. So let's move on along here. Let's move along. All right, there we go. Is there a slide coming up here? Here's what we're going to talk about here tonight, folks. We're going to discuss what happened recently in the markets. We're going to see what's happening in the upcoming week. We'll talk a little bit about our 2 to 10K challenge, your challenges. Put it up in the questions box. We want to talk about your challenge. This is actually your night. I don't need to do this. I know how to trade. I'm okay. But we'll sort of address your challenges. Not going to get into any particular trades that you have, okay? We're not here to analyze your trades tonight. That's something we do in the trading room. But basically, we wanted to answer your general questions. That's kind of what we're doing here because we have people from all walks of life, all geographic areas, all experience levels, everything. So we want to try and keep it somewhat general so we're not, boring anybody with some specific trades that you may be in. And again, so after that initial session, we'll close it off and then we'll get into our options primer for anybody who is new on. All right, that's kind of the objective here. All right, so what happened here? All right, this is a look at, I think I kind of missed something. Did I miss something here? Okay. All right, there we go. I like that transition. So here's a chart of what happened last week. Let's take a look here, expand this out. So on Monday, it was Monday was a low news or no news day. Usually on days like this, markets tend to gravitate, to the upside. I find that markets gravitate up. If they go down, there's usually a reason they go down. They go down fast and furious, about 5 times as fast as they go up, and and they go down pretty quick. And that's the good news. The bad news is with going down, is that the markets will find support somewhere. They will find support. I mean, they find resistance at the upside too, but it just seems like it could poke through resistance a little bit easier than through support. But on Monday, we got the continued momentum from Friday's positive economic news. So the market ran up here, busted through that 475. Excuse me. Come Tuesday, there was some profit taking, pushing up into that major resistance area that we've been talking about for the last several weeks. And we're still pushing higher on Fed member Barr's comments on bank capital regulations. Then, of course, the market came down a little bit here. Continued momentum on expectation of the Fed's scaling back interest rates. That was on Wednesday, and there's some pre-market candles in here too. On Thursday, we got a technical drop-off on higher than expected CPI numbers and lower than expected unemployment claims. Not what you want to see that favors markets. It might favor the economy, but it's also a bit of a threat to interest rates. I don't think the Feds are in any hurry to raise rates, but they're not all that convinced they're going to be going down anytime soon right now. And then when they see numbers like this, higher than expected CPI numbers, they're still pushing up. Unemployment claims are lower than expected. So everybody's working. The labor market is strong. It's inflationary, in case it's inflationary. And on Friday, SPY retraced off major resistance, dropped several points before regaining momentum off lower than expected PPI numbers, which is actually good. That pushed prices higher. Also, we have earnings. Earnings started on Friday. We're back in the earnings season for the first quarter. Um, First quarter or the last quarter. Maybe it's the last quarter. I think it's the last quarter. Yes. I'm jumping the gun here. JP Morgan, excuse me, Wells Fargo, Citigroup, BlackRock, Bank of America, and more. I think Delta Airlines was in there as well. So that kind of pushed SPY a little bit higher on Friday. So last week, trend to inflation remains lower, although further moderation ahead. But the goal of that Fed's 2% could be bumpy. This was the consensus here. Uptick in CPI, just a reminder that that last mile just may require some more patience. I don't think the Feds are going to be uh, scaling back interest rates quite yet. Timing of that first rate cut could be a source of volatility, and now they're talking about a little bit later on in the year. Rebound in earnings, new market highs, uptrend in stocks remains intact. So we are still pushing to the upside here. We're not out of the woods yet. That's the general consensus. We're not out of the woods. Here's what happened last week. And S&P rose 1.8%. So year to date, we're up 0.3%. Nasdaq and Dow Jones both year to date down 0.3%, even though Nasdaq rose 3.1 and the Dow rose 0.3. So I mean, we're just starting, right? Just a couple weeks into the year, so there's nothing major going on there. Coming up on this week, tomorrow, Martin Luther King Day, bank holiday, markets are closed. On Tuesday, we've got the Empire State Manufacturing Index, also called the New York State Manufacturing Index. We have hawkish Fed member Waller speaking. I believe that's coming up in early afternoon, perhaps. Earnings, we got Morgan Stanley, Goldman Sachs, Interactive Brokers, PNC Financial Services Group, among others. Watch for these banks pushing up the markets on Tuesday. Wednesday, retail sales numbers are going to be coming up. And we'll see what happened here in the over the holiday season. We also have hawkish Fed members Bowman and Williams speaking. Earnings include Charles Schwab, U.S. Bancorp, Alcoa. These are bellwethers. Alcoa is generally the bellwether for earnings to come. Then on Thursday, we got unemployment claims, building permits, housing starts, earnings including M&T Bank and other regional banks. And on Friday, you have consumer sentiment reports, inflation expectations, and existing home sales. And I just want to correct a typo here. There it is, inflation expectations. There it is. I had inflation spelled wrong. Okay, there we go. I'm a stickler for typos. I hate typos. They drive me crazy. They keep me up all night. Okay. All right. So expect some volatility might be low on Tuesday. Should pick up to moderate on Wednesday through Friday. Okay. Wednesday through Friday. So the thing here is to trade with modest gains. Where did it go? Where did it go? Trade with modest gains. Um, Expectations early in the week, possible greater gains later on Wednesday into the end of the week. So we're going to start out a little short, and that's okay. You know what? Usually especially after long weekends, I like to kind of feel the waters before I jump in any trades, and just see where the markets are going, how the nuances are, how the markets tend to behave after a long weekend. Try and get a feel for what's going on. So that's okay. I like to ease into it, right? Like to ease into it. Folks, we have many opportunities all day long, every day. Every day, opportunities present themselves. And here's the thing. If you happen to miss a trade, don't chase it. Just let it go. I'll tell you why. If you chase a trade, you ever get in a situation, oh my gosh, it's going up. I want to buy. So you put in a buy order, and then by the time it hits the market, it's a little bit more. So you change your buy price to that higher price, and the cycle happens again. It gets on the market, and you see, oh my gosh, it's up a little bit higher. You change your order again and again and again until eventually you get it. But when do you get it? You get it when the market's coming back down again. It's coming out and now it's taking you down. You're going up, the market's coming down. Is that what you want? No. If you find that you're chasing it up, so a couple of things. Here's the thing that you should do. If you want it, get it. Here's how do you get it. If let's say the ask price is $2.50, put your buy price up for 252 or 253. It sounds a little counterintuitive, right? What are you going to pay more than the ask price? That's crazy. But if the market's going up, chances are by the time your order gets to the market, it's going to be a little bit higher than we're seeing, right? So you want to kind of get on the front of the line. And that's the whole objective. You're going to grab it at the front of the line. And then when you have it, now you can continue riding it up. And so often you're going to get your 6% within a couple of minutes in that kind of a case scenario. The other thing is if you do miss it, that's okay. It's not a problem. There are many opportunities all day long in the stock market. All right. I sometimes get this comment that, oh, there's no money to be made today. The market closed within 10 cents of its open price. I say, so during the day, you'll find SPY went up, it went down, it went up and up and up, it went down, down, down. Are you holding this thing long term? You think that you're going to buy it and you're going to be in this thing for what, weeks, months, years? To us, long term is the end of the day, right? That's a long-term trade. During the course of the day, the market goes up and it goes down, and you can make money with SPY going both ways, which is really cool. It's better than what, mutual funds can do. Like, funds, they only make money going up. That's why they have to rebalance their funds and they take money out of this and put it into that. And once this has made the move, I got to take money out of that and stick it in something else. They have to always continue to look for new opportunities, right, to the upside. Whereas we can actually make money both going up and down. Anyway, we show you how to spot these trades and how to trade them. That's what we do. That's our job. So let's get on here and talk about the 2 to 10K challenge version number 3. It is official. It is official. We are starting January the 29th, January the 29th, and we expect to finish on at the end of April, April 29th. Okay. Getting into the spring here, and it's a 3-month challenge. What we're going to do is take $2,000 and turn it into $10,000 in 3 months. That's the objective. Any guarantees? No guarantees. I don't want to lead you down the garden path, but I'm telling you right now, is no guarantees. But we did this twice already in front of a live audience, and we plan to do it again because we've had people constantly ask us, when are you going to start that up again? When are you going to start that up again? So this is something we do in the trading room every morning in the trading room. The way it works is you can use a cash account, start with $2,000. All right, use a cash account. Therefore, you can trade as much as you want as long as you have the cash in your account. And we're going to be trading starting with the $2,000. And we can only trade our profits after, right, tomorrow after the account settles. So if the first day is an example, we trade our entire $2,000 account and we make $100, then we have to wait until the next day to trade $2,100, right? I have to wait till the next day to trade $2,100. If on the second day we make another $100, we have to wait for the third day, assuming we traded the whole $2,100, so we can have to wait until the third day to trade $2,200. So we can only trade up our profits. And we're generally looking for as safer trades as possible. We're not going to get into anything crazy high risk. We're going to try and go for safer trades if we can. We're not in any hurry. We're going to budget how to do this. And what we're going to do is on January the 29th, introduce you to the new web page, the spreadsheet that we're going to follow. This is going to be our trading plan. And we're going to follow the trading plan just like we did the last time. And hopefully we'll get to our $10,000, hopefully before April the 29th, right? Wouldn't that be nice? Now, if you're really on the ball, you'll want to get it on the trading room early as possible, like soon, like now, so you can learn what we do, right? If you want to be part of this 2 to 10K challenge, you know, you don't want to be learning it while you're doing it. You kind of want to have a good idea and know what to do before we get into it so that when we start the program, you will be, familiar with what we're doing. So I highly encourage you, if you're not a member of the trading room, to join now and get comfortable with it. All right, let's move along here. A lot of questions concerning the pick of the day and the day trade spy signal. Um, it's uncanny. We actually have videos, and I believe that when you sign up, you are directed to the videos. I don't know if people don't watch them, or they don't understand them, or they don't know how to trade, or what the issue is. But a lot of questions, well, they sound very similar. So let's just kind of go over this. The pick of the day. Pick of the day is, and before I go any further, I believe Aaron is online. Good evening, Aaron. Are you there? Hello?
Yes, I am here from the Interstellar Space Station. Uh, yes, I am here, sir. Thank you. How are you doing?
Oh, not too bad.
I
Why are
know
you
we had
concerned?
a little bit of an issue earlier. Did you bring that up or did you
No, 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 no. Didn't bring anything up. No, no, no issues.
no
No
issues?
issues. If there's
Awesome.
no issues, we're not going to issue it. We're not going to make an issue on it. And we'll wait until we cross the bridges before we make issue. What?
Yes.
Um, but we're gonna see. We're gonna have some fun here, and I guess tomorrow's a holiday. Don't forget, folks, tomorrow's a holiday, Martin Luther King Day. Um, Aaron and I will be busy. Aaron and I will be busy, and we've got a lot of we got a lot of meetings and different things and stuff going on. So, which will be a nice break, but we'll be back when. So Aaron and I get together every trading morning, every trading day, and what's that? What's that? So you have your set of indicators, and I have my set of indicators. What is that saying, Aaron? When our
When the indicators unite, our trades ignite.
yes, yes, another prime example, prime reason why you need to be in the trading room.
Hmm.
I don't know of any other trading room that does that. So you have two professional traders, mentors, coaches sitting right here in front of you right now in the trading room. So, all right, let's move along here. Let's tell them what the pick of the day is. That is an email that goes to you every morning, somewhere between 9:15, 9:20. Okay. It is a very specific option trade that we recommend to trade on market open. This particular trade is, I guess, determined when Aaron and I get together every morning, somewhere between 8:30 and 9 o'clock. We look at
And our
all the
team of
inputs,
elves, yes, and our
a
team of
team of
elves.
elves.
Yes.
Yes, we have all those people working for us, accumulating all the information that we need to make an educated determination on which option to trade. First of all, is it going to be a call or a put, and then which one? And then when we agree on that, we send it out. If we don't agree, what do? We flip a coin, right? No, no, we hammer it out until we agree on a trade. And are we always right? No, nobody's going to be ever always right. Or things can and do change between 9 o'clock and 9:30. Sometimes a news item will pop up that's just going to kind of mess things up. So, but this, the propensity of the option direction, we usually get that right. We have a very, very high um, success rate. And it goes out. So the idea here is for you to buy this at market open. Now, by that, I mean within the first 2 minutes, wait a few seconds for the bid-ask spread to settle in nice and tight. Settle in nice and tight. Between 2 and 3 cents. That's really what you need. Now, that's really especially important if there's going to be a wide gap. Oftentimes, when the gap is very wide from the day before, you'll get a really wide variance between the bid and the ask. And then what you want to do is, let's say it's a call option. Call option. For those of you who don't know what a call is, if you expect the market to go up, you buy a call option. If you expect the market to go down, you buy a put option. So let's say the pick of the day is a call option and the market opens and it's going down. Well, then just wait. Look at the 1 minute candle. Pull up your 1 minute chart. Look at the 1 minute candle. Wait until that 1 minute candle starts turning back to the upside. You see the pressure coming back, turning green. Then buy it. You'll get it for a cheaper price. Okay. So you buy it using a limit order. Always use limit orders on these. And then immediately put it up for sale for a 6% profit target.
After it
Okay.
fills.
After it fills. Or ride it up. We say 6% because you have to have a target price to determine whether it's a success or not. So we just use 6%. We found that's a good balance between risk and reward. But most often, people get a lot more than 6%, let me tell you. As a matter of fact, if you find that the 10 exponential moving average is over the 20 exponential moving average on the 5 minute chart, and the same situation has set up on the 1 minute chart, follow it up. Follow it up until the market reverses on the 5 minute chart. You should, my goodness, you can make a lot of money following the 5 minute chart. We've had sometimes people make like, many, many, many times double digits, as the market continues to ride up. But I mean, you have to watch it at that point. But make sure you just lock in so at least you have 6%, right? But and that's the pick of the day. Now you could hit your target by 9:32 or 9:42, or might even come later in the day. Sometimes the market will actually go against you before it comes back in your direction.
Yes, we had one pick like that last week actually, where if I may say so, sorry to interrupt you,
Yeah,
but
no, go right ahead.
there was a gentleman I talked to, I helped out last week. I believe his name was believe his name is Greg. He might be with us tonight, but he loves the pick of the day, and he subscribed. And he had one trade. The trade went against him, but it was filled. It was filled the next day, and he bought more when it dipped. So he followed the rules. I don't believe it hit the 65% loss, but he followed the rules when it dipped. He had a little bit more, and then the next day, he had a lot more than 6% on part of that trade, and then the other part of the trade, it obviously it filled at the 6% good till cancel order. I believe that was what was that? Maybe Wednesday or Thursday, where it was a call, but it went against us, and then it ended up going back up in our direction. So there are different ways to play it. There are different people, different people play it differently. If some people trade 0 day to expiration options, some people use it as just a thought on the direction of what we think that the market is going to go at the open. It really depends on the customer. Those are more advanced students and clients of ours, but it's really a great moldable technique to utilize in your repertoire.
Absolutely. So that is the pick of the day. Next up, we have the signal. The signal. This is an algorithm that is triggered 3 to 5 times a week. 3 to 5 times a week. Now, I understand that I think it was Friday. It had a loss. It had a loss on Friday. We took a look at it and we tweaked it a little bit, so that should not be a problem anymore. So sometimes, things are not going to go the way they are. And sometimes um, these these trades where you have to okay, so you get the signal within 2 minutes, you would buy the option. The signal comes through on your cell phone and on an email. So jump to your computer, your cell phone, execute the trade. If it does not give you 5%, just like with the pick, put up for sale for 5% profit target. If you don't get your 5% by the end of the day, sell it at the close. Now, once in a while, again, this trade could turn on you, and you may have to, this is a longer term program. So if you have maybe 2 or 3 days where it doesn't work out, okay, it doesn't mean it's not working. It's just maybe in that time period it's concentrated. So what we've noticed here, and Aaron and I talked about this and hammered this out and discussed this to the ends of the earth, with the fact that the last little while we've been pushing up into a 2-year high, 2-year very, very strong resistance level. And I think Aaron, with his longer term charts, was saying, correct me if I'm wrong, that, we're probably going to get a bounce off this and get a bounce off this. I'm thinking here, well, you're probably right, but there's some fundamentals that still support a higher move. So I don't know what's going to happen. Are we going to push higher or bounce off? We don't know. Turned out, I think in the last several weeks we were both right, just different times. In fact, I think you called it both times, and sometimes to the upside, like huge, Aaron, and then another
Yeah,
time to the downside, huge.
yeah, and
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 we
that's the
both
power of
called
the
it.
Fibonacci swings that we employ in the trading room on the 15-minute and higher time frames. Yes, that is correct. So we spot where there could possibly be larger traders on the 15-minute, 1 hour, and higher time frames, and we like to exploit those areas. This week we saw some 382 buyers that took it all the way up to 477. I believe it was what, 472, maybe 472 when we talked about possibility of getting into the 477 level, or maybe 473. And we've also been talking about working on possibly a way to take some advantage of these longer term swings, possibly buying out of the money. Maybe a week expiration away, something like that, to take advantage of this. But we've been really spot on in the trading room about calling potential areas where price could reverse. Even besides the 382 level, I do believe we called a couple other very strong support and resistance levels this last week. And if you traded the rest of the trading day with that information, it would have been spot on. I don't know if you want to pull up the chart I sent you here or not. Later on, maybe you could talk about that, but because that was kind of a golden example of what we do in the trading room when I come on board with my analysis. But yeah, for those of you that join in the trading room, you have a lot of value for the rest of the trading day.
Yeah, I don't have those charts handy, so Again, I didn't want to get into detail on that, that level of detail tonight because it's kind of a
Sure,
general sort of thing here.
sure, of
But I
course.
did want to mention here, I've been getting in there, and I think you have too. We've been getting a lot of people asking, so I'm not really sure what's going on, but it seems like a lot of people just don't know how to buy and sell options. And some of the questions that have been posed to me have been kind of, I'm scratching my head. Okay, so you're obviously new to this, and oh yeah, yeah, and don't know what these are about. So I'm going to give you a bit of an options primer later on, but I want to kind of go over this because I think this is going to affect a lot of people. So options are actually contracts that you have with an options holder. And I want you to understand that, okay, first of all, when we give you an option to trade, that is the option to trade. All right. So what you do is you want to buy to open always. So you're given essentially four choices and then spreads. So we're just stay with a single leg or what's the other word they use? Just a um, oh my gosh, can't think of it. Just a one-legged thing or a single. We're not getting into any spreads. No multi-legged spreads, no straddles, strangles, no iron condors, no butterflies, none of that stuff. No cover calls, no naked puts, no naked positions at all. We are buying and selling in that order, calls and puts. Calls to go
Yeah,
up, puts to
I
go
like
down.
I like to keep my clothes on when I trade, so I like
Me
to
too.
always.
I don't want to see your body, and you don't want to see mine. And I don't know where they come up with these names, but that name alludes to the fact that you're in a position, but you don't have the backing to cover your position,
Yeah,
and that's a very dangerous spot to be in. I'm going to tell you right now, options trading can be very expensive for you if you don't know what you're doing. All right, I'll give you an example. Um, and some of you have heard this already, no doubt. My lovely lady Amber from years and years ago, she's 5 kids, want to get into the trading. She came from a health sciences background. I think she's a massage therapist or something. And of course, there's no guy in the picture. I guess he took off, or they took off. I don't know. But anyway, Amber was a really cute, I never met her, never even seen her, but I think she's a very good natured lady. And she actually took my course and our course, I guess, and learned this stuff. She was actually doing quite well. Then she came to me one day and said, "Oh, I got new strategies." Oh my gosh, Aaron, not Aaron, Amber, we're not teaching new strategies. What are you doing, Amber? Well, I'm selling naked puts on FFIV. I said, Amber, I want you to stop doing that. But I'm making money. She's arguing with me, arguing with me. I said, oh my gosh, Amber, were we related? Was I married to you at one time? I'm thinking to myself, you know, stop arguing. Just do what I tell you to do. Don't trade naked puts. You don't want to go down. Well, why not? Well, I told her. That's fine as long as FFIV stays the same and continues to go up. You'll be fine because the value of your puts is going to go down over time and you'll keep the money for your puts. But when FFIV drops, and it will, the value of your puts goes up and somebody's going to want their stock and you're gonna get a margin call from your broker. Well, what's that, Hugh? And I tell her. I forgot the numbers now, but I mean, if you were to look at, well, let's say you were to look at SPY, each option controls 100 underlying shares. And if you're talking about the 476 calls, well, one trade could make you liable for $47,600 worth of equity, right? Each share is $476. Multiply that by 100, that's $47,600. Now, you don't have to have that kind of money. Let's say you had half of it in your account. Let's say you had 23, $24,000. You know what? Or even if you had 100,000, your broker will be glad to take half of it and lend you the other half. Even if you have $1 million in your account, they'll only take half, lend you the other half. So you pay them interest. And that's really where brokers make their money. They make their money by lending you the money to buy stock at an interest rate, of course. They charge you interest rate. So commission is almost a secondary income source to these guys. That's why it's so hard sometimes to get a cash account from some brokers. They like you to trade on margin. So knowing that, anyway, Amber didn't listen to me. She continued trading, and then eventually she did get the call. She called me up. Oh, Hugh, I got a call from my broker. I said, okay, how much do they want? I don't know what she said, $45,000 or something like that. I said, well, you got to come up with that money or they liquidate your account. Well, she didn't have the money. They liquidated her account and she was done. That was the end of her, that was the end of her trading career. And yet, had she just stayed the course, stayed within the guardrails, she would have done all right, you know. And it just scratched my head. I told you. I told you so. I told you. I told you. You didn't listen to me. Buy to open, sell to close. That's the way you want to do this. So when you buy to open, you click on the option price, the ask price. You get this screen or some kind of a um, iteration of the screens, whatever it is, and you can change the parameters. You just want to make sure this is all green. Green, buy to open. All right. You can change the quantity of your options. Make sure your strike price, expiration date are right. It's a call option. Even if you buy a put, it's still going to be green because you're buying. Use a limit order, always, limit orders, and here's the price. You can change the price up here with the plus and minus day order. To buy, you can use a day. If you're going to sell something, use a good till cancel. And then immediately after you buy it, put it up for sale. And you should see this red background here. This thing should be red. And of course, you can change your price, add in your add in your 6% or 5% or whatever it is that you want, or 10 cents or 20 cents or whatever you're doing, and make the duration GTC good till cancel. And then you want to make sure that that gets up on the board quickly. And that's the way it is. That's what you do. You want to buy to open, sell to close. Do not ever hit the the sell to close. Sell to open. You never want to do sell to open. Get that out of your mind. You're never going to sell to open. That puts you in a bad spot. The stock then has to go in your direction. So what you're going to do, you're going to get some money right away when you sell to open, but you're not going to be able to use that money until you buy to close the position, which would be great if it works in your favor, but if it turns against you, again, you could lose a lot of money in that case. And naked is if you don't have the option or the stock or the cash behind you to substantiate your options trade. Hope that makes sense. I know some people ask about this, and I had some real interesting kind of emails this last week. Um, I don't know if the gentleman's on or not, but one guy said to me, "Oh, I don't know, it was a pick or something, or maybe the signal. So it wasn't working. Signal was a signal. It was not working." He said, you guys talk about 96%, but I only got 67%." So I said to him, yeah, so normally I don't get engaged in this kind of thing because, we could do this all day. We have a lot of people emailing us all the time, folks, all the time. Both Aaron and me and customer service and everybody, it just never ends. But I said to him, I'm curious. Can you send me your your trades? So he sends me this spreadsheet. Aaron, you're gonna love this. And I'm trying to match it up to the signal. I'm scratching my head. He didn't even trade anything close to what we're telling him. Well, I looked at his losses, and all his losses were completely different than what we're. And like sometimes, it'd be a put instead of a call, or he'd get in there, 20 minutes after we send it out or something. I'm scared. Well, wait a second. This isn't what we sent you. I'm surprised you're 67% right. You know, just want to scream. Um,
Yeah, if you're using another methodology and then trading the signal on top of what you're trading, you're gonna have an issue. So some people can keep it separate. I talked to a gentleman, Michael, earlier today, extremely helpful guy, has huge amount of experience. Um, and it was really great. It's really great talking with him again. But he compartmentalized and he keeps a track record of all of his different strategies. And he was so happy this week because he traded the pick of the day. He was up something like over $2,000. If you don't mind me saying so, Michael, I hope you don't mind me saying so. But he followed the rules. He did what he was supposed to do, and he was up for the week. So if you have a problem with the rules, I don't know. We've been talking. We might be releasing a video coming up next week. I don't want to say too much about it. But we're having a lot of the same questions that are coming up while we're training people and a lot of subscribers have come on board with the both the Signal and the Spy. They like them both. A lot of people buy both products, which is great. But there's differences in how to trade them. There's also nuance in how to trade the pick of the day. Like you said, Hugh, with the you wait for the 1 minute candle to go in your direction. I even told one customer, I said, you can wait for, if you're just getting started with options, if you're just getting started on how to understand this, you can wait for the 1 minute candle to print to make sure it's going in your direction. Um, Before you get in, and then obviously put in the limit order and set your 6%. Let me know if I'm wrong on that, Hugh.
No,
But
no.
if you're just getting started and you're having, sometimes for calls, there's three red candles in a row, and you want to get in on the right footing. Or the same thing for a call, for a put or a call. Um, sorry to ramble a little bit, Hugh.
No, it's
Here,
okay. I
Hugh.
don't even wait for the green candle to print. Like as soon as I see the pressure going back, like you were just
Yep.
saying, let's say you had three red candles and the green is starting to come back in on the fourth. As soon as you see the pressure going to the upside, get in then, and get in then. We had a question on the board here about charts or something. How do I see these candles? Well, all the brokers will have charts, or they should. Any reputable broker can have charts. So flip over to your charts and look at the 1 minute chart, and uh, that's where you should see the pressure on where the market and if it's going up or down. So absolutely true, Aaron. I mean, they're different programs. They have similarities, but they also have differences. And we give you the rules when you get these picks. There's also this is what it looks like. What I'm showing you here. Actually, I think I'm going to go. So this gives you an example how to read the code, and we list the rules underneath. So read the rules. So read the rules. Look at the videos that you're given when you subscribe. Get whatever information you need, and then if you don't understand something, there's also a Q&A section on our website. I think it's under. Oh, I should know this, Aaron. Where is it? There's a Q&A section. I think they're supposed to be, or they might be changing it around a little bit, maybe making the Q&A more prominent. But it's under about Day Trade Spy, and over here, if you go down to about Day Trade Spy, there's an FAQ section here. Click on that. A lot of your questions could be answered down in here. I've had people asking me about, what about the 25K rule? Click on that. Gives you, gives you all kinds of information on that. Very brief explanations. And what a call option. I've had that asked of me too. Well, what's a call? What's a put? Well, go right into that with this. And so there's a lot of questions that could be answered right here on the FAQs. So go to those resources first, and then if you really um, can't find the answers, then email us, and then we'll be happy to explain it. But you got to appreciate that we have a lot of people. We love to answer emails, but Aaron, we get hundreds of them a day, right? And
Well, Hugh, the fact of the matter is you're a little bit more popular than me, so I don't have as many fans as you yet. I hope one day to have as many fan letters as you. But
uh, I can appreciate that, Aaron, but people see they know that you're much smarter than I am, but you see I'm the better looking guy. And the women especially they just I can't shake them
they,
off.
yeah, they can't help themselves.
They can't help themselves. It's a sickness. I understand. It's a sickness, but I try to accommodate everybody in this world, but there's only so much we can do. Anyway. All right, this is what it looks like when you get the pick of the day or the signal. This is what I'm showing on the screen. So this is it right here, that pick in yellow. That's what you're going to see, that yellow option trade. So look for that, and it's very easy how to read this. It starts with SPY, that is the name of the stock, and then the expiration starting with the year, which is the 24th year, 01 January, right? That's the first month. And 12 in this case is an example, the 12th day. You get a C for calls, P for puts, and then the strike price, in this case, 466. Very simple. And of course, you get the rules. And there's more under this too. So just take a look at that. So, all right, let's get into the fireside chat. And what else we can talk about? Let's go over to some of these questions, Aaron, on the questions box. Yeah, my gosh, they're all stacked up here. All right, you're gonna review the trades from last week. I know we had a bunch of trades from last week. Um, no, I think what's important is where we're going. I mean, I talked about what the market did last week and stuff, but we made some money last week. I don't know, did we lose anything? I think the SPY signal was we ended up cashing in. I think we lost it was, I don't remember now, 25 cents or something may have lost or something. The market came back in our direction at the end of the day. And again, sometimes, options need room to breathe. So sometimes you might see it going against you, but just hold on, wait, because chances are it's going to come back in your direction, um, at some point. All right, Aaron, you want to get some of these questions here?
Oh, sure. Yeah. Let me look up here. Um,
Let's look in here and see.
uh, person was asking for a record of the trade of the day. I think you're talking about the pick of the day. The record is just very high. It also depends on the person that's trading it, um, and how much experience you have. But if you trade the rules and trade it correctly, you should have a very high success rate with the trade.
Yeah, I want to expand on that a little bit here. So I think, Aaron, a lot of people think they're going to just automatically enjoy the same success we are. And some will, and some actually do much better than we do. Believe it or not. Yes, they do. They do. And no two people, I don't think, are necessarily going to get it at the same price, even though, you might get it at the same time. Markets change continuously, like in microseconds. Markets are always changing. So I might pay 224 for an option. You might pay 222 or 220. So you can't look at it like that. And that's one reason we don't post the results. We do post them. All right. Inner Circle members get the posting every day, in a follow-up report as to what we actually did trade. So if you want to look at the record of that, make sure you subscribe to the Inner Circle. It costs you next to nothing. I think coffee and a donut a day or something. So get that, then you'll get the record every day as to what we actually did in our trades. But don't just cling on to somebody. See, everybody's going to have a different capitalization, a different risk tolerance, different understanding of the program, even a different interpretation of the market at the time. So you mix all this together, and it's rare that two people are going to have the exact same trades at any one time. Uh, da, da, da,
Yeah, there
da.
was another question. Uh, he said, would you consider setting a pick of the day later, maybe around 6:15? Um,
Oh yeah, 6:15
it,
at night or no morning. I think that was in the morning,
that's
wasn't
at
it?
like 9:15. I think he's on the West Coast. So
Oh,
if I could answer this question, uh, sometimes the pick comes out at 9:05, sometimes 9:10, but um, on a very rare occurrence, does the market go in the direction that we think that the pick of the day is going, and then just completely reverse? It usually doesn't happen that way. Oh, sorry. It usually doesn't happen that way. So it usually goes to at least or take profit, and then it might reverse if it's some type of knee-jerk reaction on news. And we also do a lot of things early in the morning. We have different reports we have to send out. We have the trading room that we have to open. Um, so we want to make sure that everybody has the pick in their inbox before we start the trading room, especially those that have to maybe get their cup of coffee, get their cup of tea, use the bathroom. Sometimes we have to do those things too. So
mention that.
yeah, so we're humans like everybody else, even though I like to say that I'm just a mild-mannered newspaper reporter over here. But yeah, I mean, we're human just like everybody else. We have sometimes, I'll be the first to admit it. Sometimes we have struggles sleeping, or sometimes we have wake up early or wake up late. Different things like that. And so we have a strategy and a system to try to keep this a well-oiled machine, and to make you guys the most money, and give you the guys the most value possible.
That's what we teach, what we trade what we teach. So here's another question I want to get to. It says, do you send an alert if the trade goes south? No, we don't. No, I know it sounds crazy, but we, believe it or not, we do not watch the markets all day long. In our picks, we do give you enough time so that most of the time, if you must hold overnight, you are okay to do so. At least one night, sometimes two, maybe even 3 nights.
And
So
well, you
you
also
go.
touched on something here that there is a difference between the pick of the day and the signal, at least the rules for right now.
Yeah.
If a signal goes against you, the rule is to get out of it before the end of the trading day. If the pick of
Yes.
the day goes against you, you have three options. You can stick with the status quo, which means you can hold it. You can, if it gets to 65% loss, you can reevaluate, or if it gets to a 65% loss, you can average into the trade, bring your dollar cost average down, and then end up having a lower cost for that trade. And then both trades can go in your direction, possibly. And you could even make more than 6%. If it goes up, you have two trades in, dollar cost down, and then have the trade go in your direction, or get out with just a 6%. But yeah, just want to put that in there.
Yeah. There's another question here, suggestion here. Can we put the trades that we do on in the trading room? Can we put them in the chat box? Uh, we tried this and it doesn't really work. You see, you have to pay attention and listen. And we don't have time to come into a chat box and start typing away. These things happen fast. We explain it all, we discuss it, we want to get into the trade, put our exits in. But if you go to Zoom, now I know how yours is set up, probably the same. Under the there's a section there at the top on the dashboard. It's got three little dots that says more on it. Click on that, and there's a choice there that says caption or something. I think it's a caption. If you
Yeah,
click
show
on that,
captions.
then it translates our voice into script. So you can always go back and review what we were talking about. Um, and I wish there was some way to cancel out Aaron's bad jokes, but haven't found a way to do that. So
Wow.
that you have to tolerate. But unfortunately, we don't have that luxury of a lot of time to punch up those trades on a like a chat box or something. Maybe one day the technology will be there when we can, but so another question here real quick from Howard. I want to kind of wrap this segment up because we're getting into the second part of this. Real quick here, when there's say low volatility, should we stick with 6%? And if you say high volatility, might we go market more target more than 6%? So when there's low volatility now, you might even go for say 5% or go 6, but when there's higher volatility, you can usually end up with a lot more money than 6%. So it's something to keep in mind here. Another question here from Steve. Why do you use a percentage? Why do you use a percentage instead of a fixed amount such as 20 cents? We do use fixed amounts for scalping, usually somewhere between 6, 7, and 10 cents, sometimes a little bit more. But we like to also use percentages, and there is risk with percentages, but we try to find that balance, and that 5, 6%, that's a pretty good balance between risk and reward. Thank you for that. Who is it? Somebody just said here, Charles, I love the pick of the day. Thanks for that. What is your record for the pick of the day? It's very high. And okay, let's move on here, folks. Let's move because I want to tell you about the trading room. Trading room. This is where you need to be. All right. And this is actually a really good spot to be because every morning, Aaron and I, we mentioned this already, we moderate this. Actually, that's not the word for it. We host it. Moderate implies that people are there talking or something and everybody's kind of talking. We don't. We actually host it. Okay, we host this. So okay, there you go. Hosted by Aaron and myself. Okay, there we go. And we've been doing this a long time. We've been doing this combined over 40 years of market experience. This is where strategies come alive every morning, 9:20 to 10:30 Eastern time. You're going to learn from the best, folks. This is what we've been doing here. It's interactive, exciting trading. So just like with this here, you can punch up your questions and comments in the questions box. Aaron and I are the only ones that see them, so go ahead and say whatever you want. And we teach what we trade, trade what we teach. So we don't give you all this peripheral stuff out there. We don't talk about, other stocks. We don't talk about Apple or American Airlines or, Target or any of these things. We don't talk about other strategies. We don't care about anybody else. We don't look at other people. They follow us. We don't follow them. Uh, doesn't that sound arrogant, Aaron? I'm so sorry about that. But I mean,
Oh
it's
no, that's no, no,
it's the truth.
that's not arrogant. It's more like um we want to provide the most value and most education for our strategies and methods that we employ. So to get distracted with other people's systems or strategies that may or may not work, or that are different than ours, is kind of taking our time away from what we've used, tried and tested and true strategies that help people make the most money. That being said, if I could say something real quick,
Yeah.
Howard, F, you wanted to know how to write up a pick of the day that is going way above 60%. That's something that we're going to get into, I think, in the coming weeks. Um, I can't really mention too much into that, but maybe Hugh, if you want to talk about that briefly. I believe you're in the trading room, Howard, so maybe we can talk about that on Tuesday as well.
Yeah.
Um,
And yes, hang in there, hang in there. Even if you had losses, and do just continue to be statistically those programs work extremely well, extremely well. Michael's asking here, do you sell premium? That's selling premium. We buy to open all. Yes, yes. Okay, we're talking about that. Sorry, sorry. Um, wow. Yeah, some of these people have made a lot of money this last week. Anyway, let's move on. Watch us make real trades, folks. Real setups, real money. Any questions, you get them answered in real time. We've got the longest running trading room that we know of. We've been going since 2010, so we're in our 14th year on this. That's a long time. That's a long time. So my question to you, can you afford not to subscribe? $699 for 3 months. If you do the math, it works out to about a Subway sandwich every day for either Aaron or myself. We both do not get to eat on your subscription. Only one of us gets to eat lunch. So you can decide which one you want to eat. But that's all it costs you.
Go work for food.
We work for food. So honestly, I can't think of a better program that I wish I had a Hugh and Aaron when I was learning this stuff. Knowing what I know, I would give anything to go back because I can assure you I would have lost so much more. I would have lost so much less money by listening to, and we give you some pretty goofy things that we talk about, things that are that little nuances that are going to make a big difference. Like the thing I just told you about, buy 1 or 2 cents more than they asked, so you get in the front of the line, you actually get it when it's on its way up, and you're not at the back of the line getting it when it's coming back down. And now oh my gosh, I bought it for $2.68, and now the options were $2.50. Look at that. Ah, right. And now you're scrambling to what are you going to do? There's also
If
some
I
other things about
if
that we
I
could
could
talk
say
about.
something as well, Daniel H, I see your comments. Please contact me, Aaron at DayTradeSPY.com. Let's see what's going on. Um, we're more than happy to help you. Um, sometimes when people have issues, it takes a little bit for the customer service to respond exactly to your question. So we are also part of the customer service team. If things have to get escalated to us, so please shoot me an email. We can look into what's going on with your trades, but I don't want to go too much into detail on that.
Okay, couple of quick questions, then we're going to wrap this segment up here. From Nestor here, question got excuse me, regarding the OMG trade from last Friday. Is it still open? I don't know. I have to take a look at it. If it's still open, then we'll probably be looking at that on Tuesday, either repaired or done. And by the way, I want to just kind of expand on something Aaron said before about if you suffer a 60 or 65% loss, that does not mean that we dump it at that point. It means we reassess it. That means we check to see, will it organically come back on its own? Why did it go down? How much time is left? There's a bunch of questions we ask. And then, is this something we should repair, leave it as, like you said, organically it'll come back, or as a last resort, then we dump it. It's not the first defense, line of defense, dumping it. It's the last resort. Another question from Marianne, why not consider the Qs? Kind of follows a similar pattern as SPY. Maybe it does. You know what? We make enough money on SPY. We don't have to divert our attention to other stocks like the Qs. The reason I don't go with the Qs is because it's very much technology based, and essentially where Apple goes that day or Google, that's kind of where the whole thing is going to go. A lot of times they're going to be very heavy influencers on the rest of the tech stocks, so sector rather. So I like SPY better because we have all the sectors covered. There isn't any one stock that in and of itself is going to necessarily move the entire SPY. I think I think the highest might be, I'm not sure. I want to say Apple or Google or Microsoft or something. And even that's only maybe 5.5% of the total weighted, um, capitalization of SPY. Whereas with the Qs, those stocks would have a much heavier weighting on it. So anyway, folks, there will be a link at the end of this webinar to access and get into the trading room. And if you can't find it, go to the website daytradespy.com and go to the section where you can subscribe or email customer service at DayTradeSPY, and you'll be able to to sign on there. But the sooner you do it, the better. And you'll want to get in early because that's where you're going to learn more about how to do the 2 to 10K challenge. All right, folks, if you want to stay on for the options primer, we're going to do that right after this. Thank you. Thank you, Aaron.
And if you do decide to leave, I will be in Vegas next month at the Money Show and Traders Expo.
Awesome. So will I. Been a pleasure, folks. All right, so for those of you still on, and I hope there's a lot. Oh, yes, there's a lot of people on. It's crazy. Okay, let's move along here. Options primer. If you are new to options, folks, what are options? They are actually contracts. Contracts. It gives the options holder the right, but not the obligation to trade the underlying stock for a certain price by a certain date. Don't get too bogged down in the terminology. Just know that if you expect the stock to go up, you buy a call option. If you expect it to go down, you buy a put option. Call up, put down. Options have strike prices. Strike prices. This is that set price at which the stock can be bought or sold when the option is exercised. Now, there's two systems. There's the European system, which says that the option can only be exercised at expiration. And then there's the American system, which says the option can be expired at any time up to expiration. SPY is under the American system. The stock that SPY follows, which is the SPX, SPX is under the European system, strangely enough. Sometimes people ask, how come you don't trade SPX? It's because much more expensive. The options are about 10 times the price. Maybe not as much volume, whatever. I just find SPY to be much more liquid, much more versatile. You can do a lot more. More people are there. Would you rather go to a party with 10 people or with 100 people? Your chance of meeting like-minded individuals is probably greater at the party with 100 people rather than 10 people. I don't know, maybe that's not a good analogy, but I think you know what I'm saying. All right, so you'll want to get the strike price, and there's also expiration dates you have to keep in mind with options. This is the date at which the option expires. It's kind of like buying an ice cube. The ice cube is going to melt on you. And by the way, the faster it melts, the faster it melts, if that makes any sense. The smaller the ice cube gets, the faster it melts. So you want to make sure that you don't hold on options. It's not a buy and hold strategy. Options have pros and cons. Pros, flexibility. There's actually a lot of different strategies you can do with options. This is just the strategy that works for us that we really like. I find that if you find a strategy that really works well for you and you develop it and tweak it and make it work for you, become an expert with it, you're going to do very well with it. It's like they say, well, why does the shoemaker makes the best shoes? Because he doesn't make anything else. The shoemaker doesn't make belt buckles or purses or belts or anything. He makes shoes. That's all he does. He might not even make boots. Maybe he makes boots. I don't know. But if that's all he does, he's going to become good at it. And that's what we're saying. With our strategy, get good at this, become an expert. You become the expert. A lot of flexibility with options. They're highly leveraged, cost efficient. You can actually get into this business with very little money, actually, even as low as a few $100s. Now, to be clear, you're not going to get rich on a few $100s. The money you're going to make on a few $100 option trade is going to buy you coffee and a donut, okay? Maybe lunch if you're lucky, but most people buy more than one or two contracts. Okay, they'll go in there for a couple $1,000s or a few $1,000s or whatever. The high return potential is the big attraction with options because of the leverage. Many strategies available, and I think this is very fun and exciting trading. There are some cons, as I mentioned, this time decay. It's like you're kind of, like I say, buying an ice cube, and you do have to pay commissions, and yes, it can be risky. And you'll find that the risk is mostly because of yourself, not so much the market. It's a matter of how you deal with the market situation, not so much what the market is. You can't change the market. Excuse me, you can't change the market, but you can change your reaction to it. All right. So what do? We day trade SPY options. That's all we do, period. That's all we do. It's just SPY, SPY. The highest traded stock out there. It's affordable. Like I say, it's truly everybody's trade. Anybody and everybody can pretty well get into this thing. You don't need mega, mega, mega bucks to do this thing. You can actually start making some pretty serious money with even just a few $1,000s. Very liquid. All right. So pretty well anything you put onto SPY, you can get filled, and it's exciting trading. I love it. It's huge, huge profit potential. I mentioned this earlier, and I mean it truly is, and it's fun and exciting. So what do? We have one stock, one strategy, 1 hour a day, and over the years, kind of figured out what works and what doesn't work in both trading and training. All right, very important. So why SPY? Why now? Well, it follows the top 500 U.S. stocks. Efficient use of analysis time. You'll find that with SPY, you don't have to sit in front of the computer for hours and hours and hours on end trying to figure out what's going on. Um, I don't know about you, Aaron, but I get in front of my computer somewhere around 8, 8:30 in the morning, and pretty quickly I can determine where's the market going to go. And we're pretty accurate. We're pretty right. So,
Yeah,
uh,
I usually get there about that time or maybe a little bit earlier. It takes me a little bit longer to jump in the cockpit and get my orange juice and get my juices flowing. But yeah, and because I have to look through I had a gentleman this morning ask me, what's the benefit of the trading room? Well, I said I look at, you know, I know you do too, Hugh, but I said I look at the daily time frame all the way down to the 1 minute chart, and I look at support resistance and chart formations and chart patterns and Fibonacci patterns on one thing only. So I know it very well. Whereas, like you said earlier, if you're looking at multiple things, you can get distracted a little bit.
yeah. And here's the other thing too. Even if it turns out, I don't know, some people had some losses, and okay, so when you're at a loss, don't sell. Don't sell then. So there are realized gains and losses and unrealized gains and losses. So a realized gain and losses when you actually hit that sell button and you turn that book value, right, into actual cash. So if you buy something for $1,000 and you're at $1,000 loss and you hit the sell button, now you have $1,000. You've turned that unrealized loss into a realized loss. You don't want to do that. All right. If you are in a losing position, hold on a little bit and see why did it go down. Usually, if it's a news item, news washes out pretty fast. The market has a great memory for support and resistance and chart patterns and all that. Kind of a bad memory for news. And usually our picks and our trades have ample time in them. So you should be okay. Don't panic if it's turning against you. Okay. So efficient use of analysis time. The moves are quick. You can earn your daily gains faster. And here's the other thing. If you have a target price, let's say you have 5% or 6 or 7%, whatever, when you hit it, you hit your target, sell it. You won't believe how many people, oh my gosh, I went through my target and then it got greedy. I kept pushing it higher and higher till it reversed and then it came crashing down. And then I ended up selling for a loss. You should never let a profit turn into a loss. Okay. I realize it's going to go up and it's going to come back down again. And you could be up 10% or come back and now you're only up 7 or 8%. Lock in your profit, make sure that you have that. You can always get back in later. Okay. Um, SPY is fairly reliable, consistent, predictive, and forgiving. again, with the disclaimer on that. All right. And prices can be anticipated in any market, up or down. So we have a pretty good idea now. Aaron and I, we're not that smart. We don't know where market's going to be a year from now or even a month from now. And I don't even know where it's going to be a week from now. Maybe Aaron does, but I don't. But we have a really good idea as to where it's going to go today. And that's all we're looking to do is make enough money here today so we can get on with tomorrow and the next day and the day after that. All right. And that's the nice thing with SPY. So, well, why not? Folks, learn something new. Stay mentally sharp. I was reading the obituaries today, and I'm reading about what was it there? And that wasn't the obituary, it was something else, some of the news story about, I can't remember now what it was, about some senior having to plow out his snow or her snow at the end of her driveway. And she's so upset about it. And how am I going to do it? I can't afford to pay anybody. And then, then they named this person and that yes, it was a her, that she was 65 years old and retired. I'm thinking, 65? Aaron, that's pretty young. I'm going to be 69 next week and I have no problem clearing the snow out of my driveway type of thing. You know what I'm saying? I think what happens is when people retire and they don't have something to keep their mind going, they tend to die very quickly. You read this all the time. Some guy worked at a factory forever, 50 years, and he retired, and 6 months later he drops dead.
Yeah.
Oh,
Well,
yeah.
your brain is a muscle, and I think it's something like 15 pounds. So if you don't use that 15-pound muscle regularly, it atrophies just like everything else. Because they're talking more and more about neuroplasticity. That even if you're an older person, you can learn new things because your brain is always making new connections, always making new synapse connections and talking. I even learned today about about something called mirror neurons, something like this, where when you're looking at somebody that's drinking a cup of water, your brain is already drinking a cup of water with them. Isn't that amazing? They did a study on monkeys and they gave a monkey a glass of juice, and I won't get too much into this, but they gave a monkey a glass of juice, and then they looked at his neurons that fired, and then they drank a cup of juice, and the scientists that drank the cup of juice, the monkey's neurons fired in the exact same place as if he was drinking the cup of juice.
Isn't that
So
something, really? Is that from
yeah,
that Impossible book? Was it The Art of Impossible or something?
The Art of Impossible. It talked a little bit about this, but this actually is a book that I just finished on parenting called The Whole Brain Child, I believe it's called. Let me just double check real quick. Yeah, The Whole Brain Child. It's a great book. I highly recommend it. 5 stars for me. And all of you know that I like to read, and I read a lot of psychology stuff and trading stuff. So The Whole Brain Child. I got it on Audible, but I also love to read regular books as well. But just fantastic research, and talking about children and how their minds work. It's amazing.
Yeah, I got to get to some other questions a little bit here. I know Daniel H has got some, and we're not ignoring you, Daniel. We're not ignoring you. Are you still there? Let me see. Is he still there? Maybe he's gone. I don't know. Let's see if he's still
Oh
there.
no, I mentioned to him to shoot me an email.
Oh, okay, good,
Yeah.
good, 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 good. Yeah. So he's one of, I find attitude is a big determinant on whether you're going to be successful or not. If you come into this thing with a positive attitude rather than a, skeptic or negative attitude, you're gonna do better. I don't know how that works, but it does.
Oh, definitely. No, that's a huge thing
So,
in the book The Art of Impossible. If any of you have a chance, check out this book as well. This guy's name is Steve Cutler. He talks about performance and flow state. He even has an entire center for flow state research and how to be a peak performer. Incredible stuff. And he
yeah.
talks about these world record breakers and stuff like that. A big thing was attitude.
Oh, yeah.
You come out on a surfboard, or you come out climbing a mountain, and what was impossible yesterday, people were breaking records the same day. And that's what's amazing. And this guy was a former journalist, and he without going into too much detail, but he was a former journalist, and he a sports journalist, and he would go all over the world and do these like death-defying extreme sports things with other athletes. He broke his bones in his fingers, bones in his wrists.
Everywhere.
Yeah, I mean, he even had Lyme's disease at one point, and was
Yeah.
and he healed himself through surfing and being around some of these peak performers. So, and he said that attitude was one of the most important things, especially having a positive mental attitude.
Well, based on your advice, I actually bought the book and I started reading it last night. So it's actually
Oh,
pretty,
great. Oh,
yeah,
nice.
it's good. So, all right, look, learn something new, stay mentally sharp, earn while you learn. I mean, through the trading room, that's what we do. You can follow us, do your own trades, whatever, but you're going to learn and earn, and time's going to pass anyway, so you might as well make money along the way, right? Again, why not? Huge profit potential. If you're serious about this, you can even have this dream lifestyle that is actually truly achievable. And it's not a joke. I've had a lot of people tell me, "Oh my gosh, I was able to buy the car I wanted. I got my whole family on a cruise vacation, and a lot of different things you can do with this money, including charitable work if that's what you want to do, whatever. Exciting, thrilling to beat the market. There's something in that, okay? It's nice to beat the market. And here's what I like. You can actually pass this knowledge on to your kids. Financial security. For me, all right, there's no greater feeling of I don't know what the word is. I feel so liberated not having to worry about my kids knowing how to make money. If they need to make money, they can go on SPY and make some money. And just especially in this day and age. All right, so here's a question here about the comparison between stocks and options. Let's say you were to buy 100 shares of stock, SPY, say at $467 a share. It's going to cost you $46,700. Um, if you have that kind of money, great. If not, hey, your broker will be happy to lend it to you. You're going to be paying interest. And by the way, they want this money back. So it's not something you're going to just kind of walk away from. And they'd be very happy to take your house if you don't have. Anyway, the point is, if you were to buy one contract, you still control the same 100 shares. But if the contract costs you $3, guess what? It's only going to cost you $300. Peanuts. Now, if the stock rises $1, your 46,700 turns into $46,800. And the option on that, if the stock goes up $1, that option probably has a 50 delta, which means your option goes up 50 cents. So don't think you're getting ripped off. You're not, because your $300 investment just turned into $350. Well, guess what? Your return on investment on the stock is 0.212% versus 17% on the option. Which would you rather have? And I can tell you folks that once discovering the power of options, I never traded stocks again. I knew where my money was going to be right here. And by the way, the most you can lose is what you put into the option. If you ever buy stock, at the end of the day, there's risk with that too. I mean, we hope it never happens, but you buy some stock out there, stocks can go down. And just ask those people that were in a lot of different stocks, a lot of great stock, a lot of bank stocks. General Motors back in what, 2008, 2009, it wasn't very good. Folks, learn from our mistakes. You're not going to make them long enough. You're not going to live long enough to make them all yourself. One stock, one strategy, 1 hour a day. And I think with that, any other questions? Let's just take a look real quick if you want to answer some of these, Aaron, or not, or just wrap it up. It is almost, no, it is 9:30. Okay. All right, Howard F. He's going to be in the trading room soon. Yes, Howard, come in. Come in, Howard. Come in, Howard. How do you get into the trading room? James W. Again, go to the website, or I believe at the end of this webinar, you should have a link to the trading room, or email us. We'll see you. The link's not a problem. Okay. All right. There's a lot of questions, but you know what? I think
You may want to copy the last comment there, John F. Thank you guys. It was profitable on all 5 of my trades last week, just following your signals. A little challenging as to when to jump in on a couple of them, but so far so good. Congratulations, John.
that is great to hear. And I'm going to just snap this out here and stick it over here. And I think with that, yeah, great to have you all here on this. And I mean, it's a long-term thing, Sometimes you're going to have some winners, sometimes you're going to have some losers, but it's basically a long-term thing. And I just want to thank you all. And Aaron, thank you so much for chiming in tonight. Hey, listen, tomorrow's a holiday. Enjoy the day off, and we'll see you here Tuesday morning in the trading room. Been a pleasure.
Yep. Take care, everybody. Be safe out there.